right. Greed works.
Hello and welcome back to Let's Play Wall Street Raider. This is episode 7 and I am RakeM, your host. I have some big news, but before I share that with you, let's talk about where we are. We have finally reached the point where we can invest in any company we choose. We have, close to $5 trillion in net worth. And if we go to general and go to largest market cap, it'll show us what the biggest companies in the game are. And the largest company right now is Intel Corporation, which is only worth $700 billion. So we have the money to buy or control any company in the game at this point. So if you know what you're doing, you can make money anywhere. You're no longer limited. Your options are wide open. And as long as you know what you're doing, you can make money in any industry that you want. So the question is, where do we go from here? Well, I'm going to show you where we're going to go from here. Right now, where we stand is we have investments in Millennium, which is in biotechnology. We've turned that industry around, and we've been fortunate in that Millennium has had 3 major breakthroughs in 3 consecutive quarters. So its pre-tax return on capital assets has just skyrocketed. It's up in the 60% range. SunTrust is making money hand over fist to the tune of $500 billion every quarter on interest rate swaps. Nippon Telephone, we have turned that industry around as well. Everyone is growing negative, or pretty much everyone is growing negative except for Nippon. We have him growing at 28%. That may change because the growth rate in that industry is only 4% per year at this point. So I don't think we're going to be able to continue at 28% growth for very long. But we'll talk about that one some more when we get there. Cisco Corporation, we started to invest in at the very tail end of last episode. We don't really have the settings on it dialed in just yet. We are growing at 14%. We're trying to reform the management, which I think is somewhat mediocre. The industry is in a good situation. We just have to get Cisco where it needs to be. I still have $100 billion or close to $100 billion in cash, and I've purchased futures on both wheat and corn, and there's been a lot of volatility in those two commodities. So normally I would try to hold wheat and sell it at 9, but we may actually sell it even lower than that. I'm thinking around 7. And corn, I normally try to get it at 8 or sell it at 8, and buy it at 2, sell it at 8. But in this case, we bought it at around $3, and I think we're going to have to sell it at around 6 because it's just going up and down too much, and it's wreaking havoc on our cash situation. We sold off all of our futures in crude, and we've been staying out of the precious metals markets because they basically are not moving up or down at all. They've basically been holding steady right where they are. So that's where we stand right now. But let me show you what the big news is. Every time we finish an episode, I save the game so that I can come back to it at exactly the same point. And today when I loaded up the game, I was greeted with a message that I will show you now. And here it is. The computer player has gone bankrupt. So all of his assets have been sold to pay off his debts, and he's no longer in the game. So he's out on the boardwalk begging for change. Now, this has its benefits in the game in that turns no longer matter. So when I'm going to do interest rate swaps, and there's, hundreds of them that I can do, I no longer have to stop after every 5 transactions, go back to the screen, re-input my parameters, and then do 5 more and repeat that process 250 times. I can simply go to that screen once, put my parameters in once, and do all 950. So from a gameplay standpoint, that's easier. But I really wanted to show you guys what the computer does, what some of its tactics are, and how to counter them, and we won't get that opportunity for the remainder of this series. So I'm sad about that, but we're going to play this game all the way through its 35 years. And you may ask, how many episodes is that going to be? I don't know. I don't know how many it's going to be. Could be 50, could be more. It's going to be however many it takes. We're going to finish this game. And I'm going to show you the things that I do based on the different conditions throughout the game. And if this series is popular, then maybe I'll come back and do a level 2, do another series at level 2 so that you can see some of the things that the game throws at you at the more difficult level, and also what the tactics of the computer are at that level. But in any case, we're going to move forward without the computer from this point. So let's get started. I'm going to pause the ticker briefly so that we can get situated here. It's April 13th. Millennium just issued its earnings report for the last quarter, and it was up big because of all those additional breakthroughs. And the only problem that I see is that the industry is, well, actually it's still improving. I expected it to be going down. I also expected our next quarter to come down, because three consecutive breakthroughs in a row is usually gives you a pre-tax return. We're at 65%, and usually it will come down almost immediately when it's that high. But I can see that it's not, so I guess we're going to leave it right where it is for another quarter, since the industry is still improving in its supply-demand situation. So there's nothing more really to do for that one. I thought that was going to be different, but it's not. All right, so next up on the calendar, I believe, is Nippon on May 18th. Its earnings are still on the rise. It made $543 last quarter and is scheduled to make $918 this quarter. It has no more debt, and it's growing at 28%. So let's see what the situation is here. It's improving. We're very capable. And lots of negatives except for us. Once you get down here to this level, you got a few that are growing, but there's such a minor factor in the industry that they're not going to bother us at all. So we're going to leave that just like it is. Alright, so let's fast forward to May 18th. Unless something else happens, like one of these takes a nosedive, or we get some other kind of message. So we'll fast forward to May 18th. Alright, so Nippon made $10 a share. The important thing is that it's almost double what we made last quarter, although we didn't quite meet the estimate. And the question is, did we borrow money? And the answer is no, we didn't have to borrow money. So that's good. Now let's take a look at our industry and our projection for next quarter, which is 1308, so we're still going up. And let's look at the industry real quick. Everyone's still negative that matters. And our growth rate is still 4% for the industry. So are we still? No, we're deteriorating at this point. So we need to bring our growth rate down a little bit. All right, so this guy is growing at 9%. And I think we just want to back off to like 20%. So go to management, growth rate, change it to 20. And now let's check and see if the industry is still improving. And no, it's still deteriorating. All right, so we need to back it off a little bit more. So let's try 14. And now it's improving. So we'll stick with that until we have reason to change it. Now we can always freeze the lending on these other companies because they're all BBB or worse except for whatever this is, Telefonica, I think. Yeah, Telefonica. But, you know, the only other option is to simply get this up to our target price and let it go until the conditions are returning to a profitable situation. But I mean, we're making good profit now, so we're going to ride that out. We just don't want to overdo it and end up having a lower return. So we're just going to back this off to 14%. Let the industry continue to improve, and hopefully our earnings will go up as a result. Are we still very capable? We are. Okay, good. So there's nothing else to be done there. Now, I only own 19% of this, and the bank owns 81%. And I'm thinking that I would like to take my cash out of this stock and add it to this 124 and go after a bigger fish. So I think once the bank can afford to buy me out, I'm going to sell my shares to the bank. So maybe when the next quarter comes that STI has some more cash, I'll have it buy me out so that it's the sole shareholder for Nippon. And that way I can be free to go after an oil company or perhaps a semiconductor company and get into a bigger industry than this. But anyway, the next one that comes up is Cisco on June 20th. And we're expecting an increase there. The industry is improving, and we're reasonably competent. So we're going to fast forward now to June the 20th. So Cisco had a earnings increase, and we also have a surplus of cash. We didn't have to borrow, so we've got $600 million that we can put towards our debt. So let's do that. And let's look at what next quarter. Next quarter is supposed to be up as well. Industry is still improving, and we're reasonably competent. And we have large tax carryovers, which is going to help as well. So our return rate has jumped to 24%. And the growth rate of the demand growth rate has jumped to 19. So we're going to up our growth percentage to 19 to match that. And we may incur a little bit of debt in the short term for that, but it'll put pressure on these companies below us for like Lucent and whatever this is. I don't even know how to pronounce that. But whatever that company is, we'll call it H Company. So whatever H Company and Lucent will have some pressure put on them to knock this crazy growth off. Okay, so let's increase our growth rate to 19. We're going to leave everything else exactly the way it is. All right. So the next earnings report that's up is the bank on July 4th. And that's just a few days away, so we'll just wait for it to come up. Corn is dropping again, which is why my cash is going down. But wheat's going up, so. So is crude. It's going up to 121 now. If it gets up to 140, we'll short it again. All right, so the bank, again, 672, right in the same neighborhood, beating last year. And we don't really care on the bank if it goes up or down as long as it's not a drastic amount. Most of our income is coming from these interest rate swaps, and that's going to be driven by the interest rate, and there's nothing we can do about the interest rate. So, we're going to get what we get, and we're not really concerned about how much or how little it's making. What we have to do is we have to take that money. Let's go to the bank. We have to take this money that we're bringing in from the interest rate swaps every month, and we have to put it to work so that when the interest rate swaps stop, we still have money coming in. And so we're going to basically invest in loans, we're going to invest in the bonds, we're going to invest in companies, so that when the interest rates come to an end 3 or 4 years from now, we'll still have an income. So we have 426 billion. First thing we're going to do is we're going to buy the other 19% of Nippon from me so that I can do something else. All right, that's done. And we have 428 billion left. So we're going to go to the network and telecom industry. So let's go to Cisco and do the summary. And we're going to start buying some loans. So we do Alt print screen and then bring up paintbrush. Control V to paste. And now we'll move this out of our way. Go back to the bank. Go to buy sell loans. Buy business loans. Yes, I want to pick from a list. No, I want it alphabetized. Okay. So we'll start with H Company. Right there. We'll buy it. Juniper Networks. Oop. Right there. Research in Motion. Nortel Networks. EMC Corporation. Lucent Technologies, which is one of the ones that's just growing like crazy. Intel Labs, JDS Uniphase, Sienna Corp, Cisco, we already own. 3Com, which is right here. Corning. Alcatel. I guess we already bought them, huh? All right, and Qualcomm. And you notice we didn't have to go back to the buy-sell menu despite having 0 remaining transactions. Okay, so that's all of them. Now, I don't know if Cisco made STI its bank or not. So let's change banks. Where is it? Oh, we don't have Cisco selected, that's why. Change bank, STI. Okay, so now they're all the ones in the network industry, they all bank with STI now. So let's look and see how much money we have left here. $296. So let's go back to Nippon and make sure that we get all of those. Where is Nippon? There it is. Okay, go over here, do a paste. Select the bank, go to buy, sell, buy business loans, yes, no, and here we are. So let's just go down the list. I know we already bought AT&T. You'll notice it's not on the list. Nokia we bought. Telecom Italia was getting close to bankrupt. Or no, that was Telecom New Zealand, which is no longer on the list. So let's look at Telecom Italia. Maybe we bought it, maybe we didn't. And we must have because it's not there. So SK Telecom I think we bought. Nope, it's right there. So let's buy it. Hong Kong Telecom. And it's not there, so we must have bought that one already. British Telecom. China Mobile I know we bought because that thing was huge. Alright. Telefonica. And it's not on the list. Maybe we already bought it. General Telephone. Verizon. Okay, must have already bought it. Bell South. Telecom France, we bought Hawaiian Telephone. Alright, Nippon we know is already ours, so Telstra. Alcatel-Lucent, and it's not there, so either we already own it or it's controlled by somebody else. Japan Telecom, and Indosat Communications. Okay, so that's all of those. Now let's see what we have left. Still have 250 billion left. All right, we could buy up the rest of the loans in the biotechnology industry, and if we bought those, then we would own all the loans for all the industries that we're in thus far. That's not a bad idea. Let's do that. So here they are, and there's actually more than what can be shown, but let's just go down the list. Alright, so we picked the bank, and Biogen must have gone bankrupt. And the bank now owns all of them. So let's have Millennium buy that from the bank and then merge the two, because we don't need to have two companies in the same industry. Alright, we're going to buy 100% from the bank and now liquidate Biogen. Alright, and that was what was left of Biogen's loan, so we're going to pay that off. Okay, back to the bank. Alright, 262. Buy or sell loans. Alright, now let's just go down the list. Vertex. Immune response. There it is. Cyocorp. Immunomed. Organogenesis. Oh, we already own that one. What am I looking for? Alright. IDEC we already own. Gilead. We may have already bought it, I don't remember. Gilead, nope. There it is. Regeneron. Cephalon. Cytogen. Gene Tech. I think we already have Gene Tech. Yeah, Genzyme's on here though. Okay, Zoma Corporation. Centocor we already have. Chiron we already have. Enzo. Biogen we already have. Amgen is the next one. Alright, let's see which ones we're missing here. So after Amgen is Genzyme, Pioneer Hybrid. So Pioneer Hybrid, MediImmune, and there should be one more. Or no, Biogen went broke. That's why there's no more. Okay, so Pioneer Hybrid, MediImmune. And they're about to go broke, so when they do, we'll get ownership of whatever's left of them. And Pioneer Hybrid. And that's not on the list anymore. Did they go broke while we were doing this? Or maybe you already had them. Maybe we already have them. Let's do a look and see. Nope, we don't already own them. I guess it's just not for sale. Okay, so there they all are. We can freeze or unfreeze them at any time. And whenever we see one of those companies getting out of line in their growth rate, we'll just go right there and come right here and freeze them up. Alright, so that's done. Now let's see how much SunTrust Bank has left in cash. Still about $300 billion. So now what we want to do is we want to even these out. So we want to keep 100,000 as, or $100 billion as a reserve for future lending, which leaves us 195 to split between these two. So we'll just add 95 billion to each one. So buy-sell loans, consumer loans, 95 billion. Prime mortgages, 63. And subprime, 31. Alright, let's see what our... Alright, so let's put 9 billion more in mortgages. Okay. I don't mean for that to seem a little, obsessive compulsive, but every year a portion of your consumer loans and your mortgages will be written off as bad debts. And, if you look at your list of loans, it's actually good information to know. So here we are, so list loans. Here it is. So when these companies go bankrupt, we write off the loss and we take ownership of whatever assets are left. But when these loans go bad, we simply take a loss. So once upon a time, I thought that it would be a better idea to invest 100, all of my money in consumer loans and to not mess with mortgages at all because their earning percentage was lower, right? So what I did was, rather than split this up into all three, I just put it all in consumer loans. But what happens is every year your bank will write off any bad consumer debt, and it's typically about anywhere from between 5% and 5.5% of your total. So even though this says 11.91, once you write off 5% of your loans, which is 5% of this number, you're only making like 6%, 6.5%, 7% at the most. So, the same thing happens on mortgages, but the write-off rate is much lower. It's like, 1%, if that. So that's why I split it up, so that, when these debts get written off once a year for being uncollectible, I don't have that major loss of assets, loan assets, every year. So anyway, I'm still tweaking these percentages, but that's what I'm doing right now. It seems to be working. So I think that's all we want to do with the bank this quarter. All right, so what day is it? July 15th. So we already missed Millennium's earnings declaration while we were doing all that. So they earned $1.89, and they didn't have to borrow any money. And next quarter is supposed to be $1.81. The industry is deteriorating, but we are capable. So let's take a look at the industry and see what we need to change as far as our growth rate is concerned. All right, we're deteriorating because this guy is now growing at 34%. That's center core. And we changed to 40, and this is 13. So we can back this down. And all of a sudden, he has a good credit rating. He was at BBB earlier. What happened to him? Wrong entity. Let's look at him again. How could he have paid that off so fast? He's got no credit. How can he have an A rating with no credit? We froze him, and he has an A credit rating? Well, I guess A credit rating is if you have less than half of your debt. So like if this number is double that number, you have an A credit rating. But he has no money to expand at that rate, so that's kind of a misleading statistic there. But anyway, we need to back ours down because all these guys now are trying to grow it, try to keep pace with us. They don't have the money to do it for very long, but they're going to try. So let's change our growth rate to 30% and see if that puts us back in the improving category. Nope, 30% is not enough. Let's try 20. And now it's improving. Oh, no. Well, this is center core, but it's still the same. Same for us too. It's still improving. This is Millennium. Okay, 20 is still a very good growth rate. And we've fallen below our target price. So, not sure why. We're still doing very well. I'm tempted, since we don't seem to be digging into our cash, I'm tempted to spend some of that on assets. Let's see if any other company in here is trading at less than 100%. No. We've got a couple that are flirting with affordability, but they aren't really yet. This one's actually Centocor we could buy. What's his rating? Somewhat mediocre now. What did he earn last quarter? 93 cents, and now he's going up to $5? Holy cow. His net worth is 40 and he's trading at 61. Alright, well, one thing we can do is we can buy, rather than pay the extra for the entire company, one way you can get around that is have Millennium buy 20% of Centocor. Oh yeah, it's already 100% owned, I forgot. So Centocor is 100% owned by Brasilia. Okay, so this is, remember a couple, I don't know if it was last episode or the one before, but we got this message about foreign manufacturers and their imports. So now we're getting a follow-up saying that import taxes are being hiked on all products from these companies. So Congress passed a bill to impose these tariffs, and the president vetoed it, and then Congress voted to override the veto. So now if you're not in the United States, your imports will have a additional tariff on them. Okay. So I guess that means that Nippon is going to take a hit, and any other company that's not incorporated or that is incorporated in any one of these countries. Why Canada? We have an agreement with them. Clear violation of in violation of major trade agreements such as the GATT and the NAFTA trade treaties. Okay, well, that's unfortunate, but we'll do the best we can under these circumstances. All right, they're going to continue to ease interest rates. So now we need to keep an eye on this interest rate. If it falls below 4%, we need to do more interest rate swaps. All right, so where were we before we saw that message? We were doing something with Millennium. Oh yeah, we were thinking about buying Centocor. So Centocor is 100% owned by Petróleo Brasileiro. So we can't buy control of it unless we can buy control of Petróleo Brasileiro. How big is he? 42 billion and he's trading at 52. He's in integrated oil, which is an industry that I want to go into. Where is he? PBR I'm looking for. There he is. There's a few bargains to be had in here. I have plenty of money. Let's buy him right now, and we'll also buy PBR. What's his management look like? Reasonably competent. His earnings are going down, but because he's got a lot of debt. No, it's not because he has a lot of debt. What's the industry's improving, so why is he going down? What did he earn before? So he lost money, made money, lost money. Okay, so he lost 2 cents and now it's going up. That makes more sense. All right, I'm going to buy him. And it looks like I also got control of Shell in the process. And let's look at PBR. He's reasonably competent. His earnings are down after 3 quarters, but they're about to go up. All right, let's buy him too. All right, now before we mess with the oil companies, Millennium has $32.26 in cash, and Centercore has $5.3 billion in assets. So let's buy some of those assets. Precisely $2 billion, so that Centercore can pay off its loan. So the way you do that is you go to buy assets. You tell it no to new assets, and now you identify the company you want to buy them from. So we'll identify Centercore, and we're going to make it $2 billion. All right, so that helps Millennium because now our asset base has gone up, and it helps Centercore because now they can pay off their loan. And it helps both of us because we can control both of their growth rates. So now instead of 34%, we're going to back that down to 20. All right, and gosh, is it deteriorating again? Now what? Oh, a bunch of these have upped their spending. And this went down. That's what it is. This went down. All right, so let's back down to 12. All right, now let's take a look and see. It's improving, and our earnings are going up. From 189 to 213, and Centercore is going from negative to positive. Well, he made money last quarter, and he's going to make more this quarter. All right, so I guess that's it on these. Now let's go back and look at the oil industry. All right, and PBR. All right, PBR is reasonably competent. Royal Dutch is reasonably competent. So let's merge them. rather than do a regular merger, which would cost us money, I'm just going to contribute the stock and then do a liquidation. It accomplishes the same thing and doesn't cost a merger fee, because you don't go through all the cost of due diligence and regulatory approval and all that. It's a private system rather than a public system. All right, so let's go to PBR and do a liquidation. All right, now Royal Dutch now owns all of Center Core and 40% of Shell. It owes 150 billion and has 190 in equity. Should still be reasonably competent. It is. All right, so let's look at this debt situation. Those are 5.65% bonds, which is a very low rate. And we're actually getting a very good price considering that the interest rate is only 6.75. So let's buy those back and then pay off half of the bank loan. So financing. Oh, he doesn't have any credit. Well, let's change banks. Can we change banks? In order to change banks to STI, STI has to have 121 billion cash on hand. So let's see if that's the case. It does not. So we'll have to contribute money to it first. So let's contribute to Royal Dutch cash of 80 billion. Okay. Now, actually, I think that was bad for STI because now it's going to have a negative 20 billion. Yeah. All right, we're going to have to sell some consumer loans to cover that. So let's sell some. If I don't sell consumer loans, it'll cash in my bonds to make up the difference, and I don't want that to happen. So let's sell consumer loans to the tune of 100,000. This is one of the joys of bank ownership. Okay, so now let's go to SunTrust. He should have 73, yeah. And Royal Dutch, if we pay down 84 grand on that, we can switch our bank to STI and worry about paying these loans later. Or paying the bonds, buying back the bonds. Alright, so now we only owe 36, and SunTrust has at least that much cash, so we can change banks. Now if you go to STI, you'll notice that he has less cash because it's now in the bond or the business loan portfolio. Okay, so we'll worry about the bonds and all that later on. The main thing is that we took our total debt down. Alright, let's look and see what we need to do management-wise. Currently growing at negative 4%. Whoa! But the growth rate is 21. Now that could drop at any moment, because this is the long term and that's the short term. But we don't need to grow at a negative. So let's just grow at the same rate as the industry, 4%. Let's eliminate our dividend. And now let's look and see what we need to do R&D wise. We're currently at 6. And looks like most of them are at 7. The highest ones are at 7. So let's make it 9. So that we can jump up to the very capable category. Okay, and we should probably do the same thing for Shell. Okay, so growth rate 4. Productivity 9. Dividend 0. Okay, now let's take a look. So here's Shell. And it's got a higher rate of return than Royal Dutch. And it's selling for more money too, a higher stock price. Okay, that's good for now. Let's let them even out, and we'll address it again next quarter, which is not that far away, just 2 months away. Okay, let's fast forward now to Nippon, which is just 20 days from now, and I'll come right back when that earnings report comes up. Nippon had a good quarter, but he's slipping in his earnings, which is not a big deal this quarter or next quarter. But in the first quarter of 2021, this number right here is no longer going to be negative. It's going to be an average of whatever we earned this year. So if this trend continues, that number is going to be $8 a share. So if our earnings fall below $8 next quarter, that's not a big deal. But if in the first quarter of next year it's below $8, then that's a problem, because we're going to have declining earnings and our stock price is going to take a dip. So we got to fix this problem either this quarter or next quarter, or we're in trouble. So we had to borrow from SunFirst in order to deal with a shortage of cash. So let's take a look at what really is going on here, because we got to turn this around. We got to turn this around, or our stock price will never get up to our target. So our return rate has dropped to 18%. This has dropped to 3%, the growth rate for the industry. And I don't see any clear reason why. A lot of these are still negative, so the situation should be improving, but it's not. I guess we're right on the edge. Okay, our projection is to make more money next quarter. So maybe we don't need to do anything, but we're reasonably competent. We're spending 9%. Oh, look at this. We've got a bunch of interest rate swap transactions. That could be doing it. Let's look, because we merged this company from a bunch, right? So it may have several. Look at all those. No wonder why we're having trouble. Okay, well, let's terminate those, because those are costing us a bunch of money. So terminate contract. And this is going to cost a lot of money to do, but we're going to be a lot better off. So we're going to cancel all of these. Terminate. Yes. Terminate. Yes. Okay. No contracts. That should be a big help. I don't know why we didn't see that before. I guess just because we weren't looking for it, I suppose. But that should really help. That will help our bottom line quite a bit. So let's repay this $5 billion. And look at that, $449. And it'll be interesting to see what happens to this number after the end of the month comes and it recalculates the projection. Okay, let's pause the ticker for a second because I have a bunch of cash again. These have gone up. This corn was up to 6, and we need to make a decision as to whether or not we're going to hang on to it because it went up to 6 and now it's headed back down again. And before it heads back down, I think we're going to go ahead and cover the corn. I just don't like how volatile that is. Alright, so we're going to cover all the corn contracts. And we're going to evaluate what we're going to do with the wheat here in just a moment. Alright, wheat is close to 6, and I normally like to let it go at 9. Okay, but it looks like it's still headed up. So, somewhere in the 7 to 8 range, I'd be happy to cover it if it peaks at that point. But it was really volatile this last month, but it seems to still be heading up, so we'll hang on to it. Hope to cover it at like $7.50, $8, somewhere in there. Okay. The complicated part about having your bank, owning your own bank and having it be your lending institution is that when you have cash to spend, you can't just spend it without making sure that the bank has an equal amount of cash on hand. See, right now, he's got 154 billion of my money, but he's only got 94 that's liquid. So if I were to spend this, he would go negative. So the next quarter, we have to make sure to not only keep our reserve for future lending, but he also has to have enough cash to cover what I have so that I can spend it without having to double check. And I got to remind myself to do that because it's easy to forget when you own your own bank and use it for your lending. All right. So let's see where we are. We haven't checked our short positions in a while. Probably ought to do that. So let's go to tax basis info. These dividends have gone up simply because each one of these companies is worth less than it was. So let's start with tech. They're almost bankrupt. They lost $5 a share last year, and they're going to lose $6.35 in the coming quarter. So that's going to basically wipe them out. They'll have like 100 billion left after this next quarter. So we're going to hang on to him because he's going bankrupt. All right. So who else? Mazda. All right. he's going to lose 945. Is he bankrupt? No, he's got some room to fall. 945 a share. So he's losing $1 billion a quarter. So we can hang on to him. He's going to go bankrupt before the interest rate swaps are done, because he's got a swap with us, right? Yep. That's the billion right there. Okay, so we'll continue to hang on to him. And then the final one, I think, was Barrick. Yeah, Barrick. And he has $5 billion left in equity. And he's making money now. So we might want to cover that one, because he's going to go back up probably. Yeah, he's been going back up. Let's look at the industry. Here's Barrick. Yeah, he's making a big profit now. So let's cover him. Cover short position, Barrick. We made a nice profit. A gain of $6 billion. Not bad for having invested or risked 7. So we made 80% back. 90%, no, 80% back. Alright, so what else have we neglected to look at for a while? Anything? Someone asked in the comments how come I was even bothering with these stocks. Is it because I was worried about this one going broke? And so these were the backup plan? These weren't the backup plan. This was. We risked $2 billion on the opportunity to make trillions. But if that went bad, these were the primary, and this was basically gambling. But the reason why I keep them separate is because, this one, I really can't sell this one without, paying a huge price in taxes. I have to give up anywhere from 18 to 20% of this value. And at this point, that's $1 trillion. So, I'm going to hang on to this guy. I'll probably keep him for the entire game. All right, so since he can't speculate more than half of his net worth in stocks, I'll keep these, keep speculating myself with my own money. That does two things. It keeps him out of trouble, from losing money if I make a bad move, or if a stock goes belly up or whatever. It keeps him out of the fray. But it keeps me rolling in cash, because I can move money around a lot easier than the bank can. So, that's part of it. The other part is that the taxes are different. I mean, it's just, if I move everything into him, then I've got to work everything through him as a subsidiary. And, I want to be free to do whatever. And he has limitations and I don't. So that's basically it. It's a matter of who has the cash. I'm doing a lot of work in commodities and whatnot, so I come up with cash on a regular basis. If I have him speculate in commodities, it can dig into his earnings. Okay, he has a stock price we have to protect. I don't. Okay, now it's common practice throughout the game and in real life for different companies to hedge their earnings with commodities trades. For instance, in the oil and gas industry, they'll frequently speculate in commodities to hedge against a drop in price. That'll affect their earnings. So they'll invest in commodities in order to hedge their exposure. But I don't really engage in that too much. I usually just, when the price is low, I buy, and when the price is high, I sell short. So I don't really care about hedging my bets in the game. Real people's lives are not on trial here. In the real world, they are. So people in the real world, operate a little bit more conservative, are a little bit more conservative, have more caution. Here, if I lose money, I'll just make it back somewhere else. Not a big deal. The only thing at risk is my high score. So, all right, now I've forgotten where we are. Okay, August 20th, and the next one up is Cisco. And, wow, look at that. We need to talk about an exit strategy for him. All right, so let's look at what we spent on him. We spent $101 billion. So 101, 435 times 5. And how many stocks? 10 billion. All right, so 50.72 is what we're looking for on him. And the reason why it's so much higher on him is because we didn't buy him when he was trading at 6. We bought him when he was trading at 15. So that's why we have to get such a high return to make 4 times our money. I don't know that we're going to get there. I think we should probably shoot for 40, maybe 42, 44. I don't know that we're going to get all the way to 50. All right, so we're growing 19%. We're spending 15% on R&D. And with him growing that high, we need to freeze these two. I mean, he's got a lot of credit to go before he has to give up on that growth rate. So let's freeze him. We already own that loan. And it's not like he can issue bonds because he's got to pay these off first. So let's go to STI and freeze him. Okay, and H Company was the other one. Here they are. Alright, so that's good enough. Anybody else we need to freeze? Juniper? No, he's not really a problem. He's not over expanding. He's just expanding at the regular rate. RIM is too. That's fine. So just these two. They're growing too fast for me. Let's throw the brakes on them. Alright, so Cisco, 40 cents, which is coming down from, oh no, it's going up. We made 28, and now we're going to make 40. Alright, so we're fine. Industry's improving. Even with those two companies growing at those huge rates, we're improving. We could probably up our growth rate. But 20 is good enough. 20 is what we're doing now, right? 19. So that's fine. Okay, we're going to fast forward to September 20th unless the interest rate goes down below 4 or if spot wheat starts to fall below 5. Okay, so I'll be back in just a minute. Okay, so Cisco made 41 instead of 40 and didn't have to borrow, and we got a big cash surplus to put towards our debt, so all that's good. let's go to Cisco and take a look at the earnings for next quarter, and they're going to be up, and we've made it to very capable. So we can back this R&D down to like 12 now. Alright, so let's repay our loan and change our R&D to 12. Okay, and now let's look at the industry. Our percentage of return has gone up to 40. That's why you want that capable management. Okay, and we're still improving, right? Yep. Okay. So we're good there. Now what's our target price on this one? Because I don't remember. Didn't I just say 40? Yeah, that was the one we just calculated. We said 40. 50 was what we would like to have, but I don't know that we're going to get that high. Alright, things to keep an eye on. Spot wheat has jumped up above 7. We said we were going to look to sell that at 8, 750 if it looked like it was going to peak. But it's going up at a really good clip now, so we may actually make it to 9. Just got to keep an eye on it. If it starts to drop, we need to cover it. Alright, crude has gotten up to 133 again. If it hits 140, we're going to talk about shorting it. And I think that's it. Unfortunately, corn went up some more after we covered, but you know, it's just crazy volatile right now. I mean, those are just some huge spreads every month. Cash is going up and down like a yo-yo. So the next earnings report due up is the bank, and we need for the bank to have some more cash so that we can spend ours. So let's clear this and fill it again. Alright, so we'll be right back July 4th when the bank issues its earnings report. SunTrust again in the $6.34 range, $6 range, and we made 300 billion this year or this quarter. Seems like we make more money when the interest rate's higher. Which makes sense because we did those long swaps, you know, at like 10%, but we did the short swaps at 4.5%. If we had done the long swaps at 12, or you know, gotten 11% out of them, it would have been different. But okay, STI. See how much cash they have. 400 billion. So we need to keep 151 billion in this account, so that would leave 250 billion to spend. And I just want to bring these two numbers up to even with this one. So we're going to buy consumer loans to the tune of 161,000 and mortgages to the tune of 61,000. And I'm going to put them all in prime rather than subprime. Okay, so 161 and 61 here. Okay, that's it. Now we have 150 million here, or billion, and he only has 183. So we don't want to take him down any further, and we may have to wait another quarter before we spend more than half of this. I don't like it being that close, but you know, it is what it is. So we're all done putting money into Nippon. Now we want to take it out, and it's just a matter of driving that price up so that we can. And then we'll have the bank get into something else. Okay, so next up is Millennium. Wow, that's quite a drop, 67 cents. Okay, next up is Millennium. And wheat seems to be hovering right around 675. We need him to go up. Oh yeah, we bought Senecor. Alright, let's check out Senecor. We stole some of his assets, but since he was losing money, it shouldn't matter. As long as he's making a profit instead of taking a loss, that's what matters. So he's lost $5 a share already this quarter, or this year, and he's finally moving back in the right directions. I bet he's got interest rate swaps too. Yep. So now that we own him, let's pay that off. Okay, he's just got the one. Alright, so yes. Okay, that'll help him out. And what the plan is here is when this price gets, if it goes down lower, and even if it doesn't, but once this Millennium has some cash, we're going to do one of two things. Either we're going to buy the stock, or we're going to buy the assets. And which one we do will just depend on what the stock price is when we're ready. So we could buy it little by little, or we can buy it all at once. It doesn't matter. Alright, so Millennium earned $238, okay, for $11.90. And we had almost all of that left at the end of the quarter. And, it's coming down. But it's still up. It'll still go up compared to last year's average. So what we could do at this point is we could buy, and our stock prices back up above our target, or our original target. And it should keep going up because we're going to be earning more. You know, we're going to earn $7.80 next year instead of $6.53. That is if it keeps improving and we remain capable. All right, let's look at the industry and see what the growth rate is now. 14. And we're only growing at 12. So let's add some more to our asset base. I don't care if Senecor's price goes down really. It's such a minor company. Let's just make sure this one goes up. So let's take and buy corporate assets. And no, it's not going to be new. We're going to buy them from Senecor, and let's buy $1 billion. Okay. And with that additional $1 billion, our earnings should go up even more. This says $1.91, but that's not accurate. That'll get revised. Well, we still have tax losses. We haven't used them all up yet. That's good. Okay, Senecor now just has an extra 1,000 cash. And his asset base has gone down, so his projection will go down. But we don't care. As long as it's above 0, you know, it'll beat this. So that's all we need. Alright, so the next one up is Nippon. Right here. looks like we're growing faster than we're bringing money in on Nippon. Last quarter we made 878, and this quarter projected 1194. Now it's okay if we go into debt as long as the industry is still improving. That's fine. We have a 31% share now, and we're trying to get up to the 40s. I just want our stock price to go up. So as long as that continues, it should. Alright, so we're going to fast forward to Nippon. Again, we're going to keep an eye on wheat. If it gets back above 7, we're going to cover. And if crude gets above 140, we're going to short it. Alright, so barring one of those events, we'll be back on the 17th of November. Okay, I lied. I forgot about Royal Dutch. This is what happens when you have so many to keep track of. Alright, Royal Dutch is up. We were negative, now we're positive. Let's go take a look at the situation with him. We're projected to go up even more. It's improving, and it has commodity hedges that are currently in the negative, and it has interest rate transactions as well. So we're going to want to eliminate everything that's losing money. So let's look at the futures. Alright, so he sold oil at 125 and it's going up, 116 and it's going up, 123 and it's going up, 165, and he's actually making money there, but the price is still going up. So let's cover all of these and we'll start him over once the price gets above 140. And yes, we're taking a loss on 3 of those 4. And now, interest rate swaps. He has 2. One that he engaged in and one that we inherited from PBR. So let's terminate them both. Oh, well, this is good. The cost to terminate is 0 because I own both parties. I didn't realize that. That's good. I like it when I get stuff for free. I never noticed that before. So if you own both parties, you can cancel it at no cost. That's awesome. So any companies that we control, that we take over and we want to cancel it, it doesn't cost any money to do it. Cool. Alright, so we've been going for quite a while now. And we've got more to get to, but we have to end these at some point, so we're going to end this one here. We'll get to Nippon next time, and everything's kind of heading in the right direction. We've got over $10 trillion now, and I see no reason why that would slow down, at least not until 2024. And until next time, have a good one.